Hey, it's Soleil, and this is episode 97 of the Orange Pill Investor. And in the immortal words of Eminem, let's get down to business. As you can see, this small account challenge is turning into a dumpster fire. And if I, I've basically turned the 5 grand into 3 grand at this point. I bought mining stocks when Bitcoin was at all-time highs, and we've had a serious pullback. So turned 5 grand into 3 grand, and that's not even the mistake. So the mistake was using margin. You can see this little buying power here, and now they're giving me this high-risk margin status warning. I should have taken a screenshot of it earlier today because I actually had a negative balance here. It was like $100 underwater or something. And so what's Bitcoin at? 62. Yeah. So this is normal. I mean, Bitcoin really could pull back to 52 easily, crash 20% below that, and go all the way down to this next support level. I don't really do technical analysis, but I mean, I can draw a support and resistance line. We got resistance at 73, 71, 71. So obvious resistance. We had 52, and we had a sharp move up. This is obvious support. As the number of data points that you can get, makes that even more confidence. But here's another support. So we've got decent support at 50. We've got even more support at 40. But Bitcoin can just do whatever the hell Bitcoin wants to do. I mean, you can have, oh, look, we got support here. Okay, well, we kind of, let's bounce off of that. And then, okay, no, screw it. Let's just go down here. Bitcoin does what it wants to do. In the long term, it's in general, its number go up. But in the short term, it can do anything that it wants. And so me starting this challenge, I probably should have not turned on margin. But I wanted some, greater returns, and if the price was going up, I would be like killing it right now. So if I want to say there's a silver lining to this, now I get to demonstrate taking an account, and instead of trying to 5x it from 5 to 25K in 4 years, I get to try to 10x it from, this was actually at 2,500 earlier, so 2,500 to 2,500 to 25K in the same amount of time. I'm not gonna readjust my target dates because I fully expect Bitcoin, MicroStrategy, and then of course all the mining companies should, to a certain extent, follow Bitcoin. So what do you do when you get into this situation? Even when you don't have margin on, sometimes, like if you only have $10 in buying power and something goes over your strike, $50, you can't even roll it. You don't even have enough money to close it. You can just let it expire, and then your shares will get called away. But if you don't want to, you've got a couple of options. So I was able to create $100 or so worth of buying power by taking, so the CLSK still has $8 in premium, so I didn't mess with that one. I'm like, I'm going to just leave that in there. But Mara, Hut, and Riot all had like $2 left, $3 left. So I'm not going to hold on to, I needed to close these anyway. So I'm not going to hold on to an option where I collected $10 in one day and then hold it for 4 more days to collect $1 or $2 more. That's not good use of your buying power. So I went ahead and rolled them early, and the Mara had decent premium because it's a lot more expensive of a stock. So I was able to just go ahead and roll this out to 4/26, so an extra week. I usually go to the next expiration date, but there wasn't a lot of premium left, so I went out an extra date and created $46 worth of buying power here. I think I paid $3 for this. Okay, that's fine. For Hut and Riot, I got $60 each off of these. Yep. And so, but I had to roll out way farther. So you can either roll up or down to create a credit, and you can also roll out. Rolling out means you choose a DTE farther out than 1 week. And Tastytrade actually recommends doing 45 days and closing that and rolling it every 2 to 3 weeks anyway. So if you're already on that strategy, maybe this is already familiar to you. But where I had only like $2 available from, and this is only Tuesday, so $2 to collect in 4 days, I went ahead and rolled out to 45 days to May 31st, and I was able to collect $60. And you can see this immediately went against me. And so maybe even I jumped the gun a little bit, but I just didn't like seeing that that potential margin call. I didn't want to get stuck selling my MicroStrategy at a loss. I want to hold that for the long run. And so I was willing to sacrifice some potential premium over the short term, over the next couple of weeks, and just take this all the way out to May 31st, get some extra buying power. After I made those 3 moves, I think I had increased, like, I think I was $100 under margin and created like $150 worth of buying power here. And so that got me out of a margin call. Now, as you can see, some things must have pumped back up, and now I've got an extra $300 on top of what I created for myself. So this might not have even been necessary, but it was a nice little exercise to demonstrate anyway. And I'm not going to do it. The CLFK's got $8 to collect, like $2 a day or something. Probably should just roll it now. But this would be the process. So you open it, click roll this position. You can roll it to next week. Choose a strike as per usual. And I could roll, what am I closing? The 17. If I wanted to still stick to the 17 and go out a week, I could collect $40 here. I can even roll up if I thought this was going to reverse course and I want to pad the stats with some extra buying power. I can still collect $30 here, or I could even roll down if I wanted to put $1.50 worth of callaway value here and go up to 16. I could collect $60. Now you're putting yourself at risk the farther you go down here, because if the price reverses and shoots up to 17 or 18, you'll be kicking yourself. And I think they call that getting whipsawed. So the price goes down, you panic, you roll your strikes down, then it races back above your strikes. So you kind of like, you make the money going down, but then you choose a strike that's too conservative or too greedy, really, instead of allowing for more callaway value. And then you get screwed as soon as Bitcoin races back up to 70, and then these jump to $20 again. So to avoid getting whipsawed, just be careful with the strikes that you choose and that you're not chasing the stock price too much. Again, I never let the price of the stock stop me from making some money this week. So even my average cost is 23. It's much less than that, actually, depending on how much premium I've collected. My average cost here might really be like $21. But still, you can't really get much premium. You can't get any premium at 21, not at 1 week, maybe a week and a half. Might be able to squeeze out a few bucks. Yeah. So if I was like, oh, I'm too scared, I don't want to sell below 21, I could collect $10, which is almost 1%. It's not even the end of the world. But I generally don't let that bother me. And I just, if I'm going to build 10, 20% call the way in, I don't worry that if I'm forced to sell these at 17 and I bought them at 23, that I'll lose whatever the amount of money is. Doesn't really matter. And I just don't like to trade scared. So I just try to have a short memory. If I cared about never losing money, then I just wouldn't be in the stock market at all. Because on a temporary time frame, anything can lose money. But this strategy works over the long term. It's high frequency, constantly getting paid, constantly reinvesting the profits, constantly adding more shares. And then when the price does reverse, then my micro strategy, my 0.78, that scared the absolute shit out of me. 4 o'clock, so my market close bell just went off like a freaking gong in my ears. All right, this micro strategy should pump, and I really wanted to keep as much of this long as I possibly could. So I would rather sacrifice a little bit of premium on a couple of these contracts than sell my micro strategy at a loss of about $400 a share. So that's how you can do it. That's how you can create some buying power out of thin air. Either roll your strikes up or down, depending on if you have a covered call or cash secured put, or just roll out to a longer days to expiration. All right. That was a quickie. Might as well just leave it there. Be good, Joe.